watch the greenbacks tumble.
Okay, hello. I hope everybody's having a great and awesome weekend. This is 50 Pips, 28th of July, 2013. Again, I'm not making any trade calls or recommendations. You and only you are responsible for your own trades. The fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers, understanding that this is just for educational purposes only. So, what's going on this week? Well, we got a lot of stuff going on this week, so pretty busy day to day, right? We've got um, a lot of stuff coming in both from the EU, UK, and the UK. Sorry, in the US, we got a lot of stuff in terms of central bank week. Okay, so we got the ECB with a press conference, we got the BOE with a press conference, we've got FOMC, so we're going to have the manufacturing PMIs out of China. So there's a lot of stuff, not without forgetting all the unemployment stuff out of the States. So clearly, there's a lot of event risk out there. Okay, now first things first, let's just do a quick outlook. So what's going on gold? Gold, no real change, right? We talked about the fact that we were moving this grind high and we're trying to move back up above the 1300, and as long as we held above the 1300s, we're expecting to rotate to try and go into the 1350s for potential break into 1400s, stuck inside this range here, 1400, 1300. Again, when we broke below 1200, we said on Twitter lives it was breaking. We expected people to look back on this and see this was call this a bargain price, right? Now, another thing which is interesting, what you want to look at, you can see this also in a 1 hour chart. If you go down to it, I'm not going to do it here, but you can do it yourself. You see once this 1300 is being defended quite aggressively, right? What happens is basically sellers are still coming in. Once we break through and we hit all the stops, we come back, you'll see this level is holding, right? And now as long as this holds, as long as this breakout points holds, this is very good support, right? It's not a good idea. At least the odds don't favor really staying stubbornly short once you break out this level that held for so long. And you can see now the buyers are coming in supporting. So as long as this is supported, expect more upside. Going into the week, 1350s pivotal, 1300 low range, 1400 high range as far as I'm concerned, okay? ES, what's going on in the ES? Well, the ES basically, I think to the downside, 1675s. I think pretty much everybody's going to looking at the same thing short term. This is the key level, the pivotal level going into the week. Okay, it still looks like we've got some unfinished business going on at that 1700, right? Now, ES being very choppy, but there's something which is being pattern that's occurring, and you see that as every time we're breaking higher, we get sell-offs, we come back down, we try and pierce below the previous lows, we get no traction, and bam, we continue to press higher. We put a little low, we come down, we pierce below it, we can't get any traction, bam, we move higher, right? The only time we got a bit of a sell-off was right here. We got a nice little technical move here, defense of the 1700s. We came down, previous support acted as resistance, and we moved back down. But again, what happened going into last week, right? We came back down very aggressively, like a lot of shorts saying, okay, we've topped here, we're shorting the move back down. Bam, we break, absolutely no traction, right back up into the scene of the crime, okay? So short term right here, as we're sitting 1686s, if we hold below, then look at the market to try and take stabs down at those 1675s, and that's really going to be a pivotal level, right? If we hold below, don't get, if we start breaking below these lows, remember, you've got support further down, and you really want to see a continuation. You don't want to get stuck shorting lows here when we can't get any more traction should we come back down. So cautious if we break 1650, 1648 to the downside. But right here, as long as we hold above, I'd expect the market to continue to want to take a stab at those 1695s. And if we take those out, then we've got that unfinished business at 1700. I've got a 1702, but basically it's 1700. If we break above there, the next low I've got on my chart is 1718s, okay? Now, before we do Euro and Cable, a lot of people wrote to me asking about EJ, so I'm just going to do this EJ quickly. EJ, we're still stuck pretty much in the same range we've been talking about, and right now the pivotal level is these 3050s, okay? So holding a whole series of higher highs, higher lows, this is a pivotal level. Like if we break down and we start holding below 3050s, watch to see if there's protection of this whole series of higher lows ahead of the 128.00 level. Okay, and as long as we get protected, then likely this level will still catch a bit of a bounce, right? If any time during the week we get a daily close below 28.00, then I'd expect this to start trading with a much heavier tone, and therefore I'd say, you know, that whole 124, 123 will come into play. Okay, but as long as any dip into this ascending trend line, into these 128s gets bought, then 130.50s remains pivotal, but the big level we need to get daily closes above are 132s. Above that, and we hold traction, then I'm looking at 135s, but a lot of choppiness around these level with a lot of key areas, okay, but no real change to the outlook. Another thing a lot of people were asking was about New Zealand and Aussie, and I just wanted to, I can't remember if we did this, well, with something we were looking at the weeklies, but I can't remember if we did it here last week or not. But I think we did. The whole point here is that we're looking for Kiwi to get back and move back into the 81.80s, basically high 81s. And what we said is just, you know, I said Aussie is going to bounce sooner or later, okay? But it's just not a high house play because it just keeps on getting battered. It keeps on getting sold. It's just a bit of a sucker's play to me to keep on trying to catch the lows, right? Don't get me wrong. In the past, when it started selling off, we tried to catch a couple of supports that didn't work. You know, you can't win them all. But the interesting thing here was the way this was trading, right? You see, we put in a weekly range here with this with these series of dojis at lows, and we were stuck inside this range, bouncing at the 200 on the weekly. And what we said is we have no interest here as long as we stay inside this chop zone on Kiwi. Even though there's a pivotal level, you could play the range. We had no interest. What we're interested in is trying to play the upside, but we wanted for it to break outside this zone, to confirm the breakout, weekly close below, and then we're looking to get long to see this move, right? And this is in play, worked out quite nicely, right? The reason I'm mentioning this, let me get AUD USD. If you look at the similar, it's just our view, right? But the similar scenario on Aussie here, like you see it's still stuck in this range. So personally, I'm not that interested as long as it's stuck in this range, this weekly range here. And a lot of people are talking about the 93.00. The only thing I'd say is, you know, I'm looking more at the 93.30s, right? 93.30s, 93.40s. I'm looking at it in terms of this zone that be put in on the weekly. So I think if we break above that and we get a weekly close or start to get daily closes above that level, then we could easily see 100, 200 pip rally move back into the 95.80s, possibly even into the 97s. But I think as long as we don't break out of this range, it's going to be a big, it's a bigger range. It's a weekly, but it's chop, okay? And that's why I still, you know, maybe you might have heard me talk about that I preferred Kiwi to the upside, didn't want to catch Aussie. This is really the main reason why, okay? Now, Euro and cable, I just want to keep it very simple on Euro and cable. So I think first things first, in terms of cable, everybody's familiar, or at least everybody that's been following the charts or following the blogs, very familiar with our chart here and basically with our outlook. Once we failed to hold below those 148s instead of looking for 142s, etc., we were looking for this to get some traction, and we kept on talking about 152s, 153s, hold the key for rotation back into 155s, 156s, and that's in play, right? And you see that globally speaking, it's been quite technical because once we broke down, we held the support, came back into resistance, we broke through the resistance, we came down, we held previous resistance acting as support, and it's continuing to rotate higher. We got those 153.80s we're looking for, so it's holding a pretty good bid tone, okay? So in terms of keeping it very simple, and a lot of people ask me about Twitter why I kept on going about 153s. Oh, it's above 153s. Why are you still talking about 153s, right? It's simply a question of context, right? And it's simply a question of daily close and trying to give some people on Twitter, some of the unit traders, a bit more of an outlook or a bit more of a feeling of what to look for and not to keep on getting chopped up in low liquidity snooze fest, what we call. You know, the past week on Euro and cable has been very choppy, but globally speaking, prices being very technical, and fairly easy read, right? Not easy in terms of trading it if you're trying to scalp it intraday because it's been very choppy, but the broader levels have held very nicely, right? And the bigger thing is what we said, as long as we start to break here and as long as we keep on getting daily closes above the 153s, this is the pivotal level. It's not a high odds trade to try and get stubbornly short into breaks of this. You want to see the daily closes, and you see that all these dips got bought, right? And we're holding right here. So going into the week, it's going to be the same thing. If we hold and get a daily close back below 153s, this could get heavy. But as long as that doesn't happen, well, most likely this whole area of support, or we looked at it on the other chart from a cyclical perspective, but basically 155s, 156 clearly attract. Keep in mind there's a lot of data, the BOE, etc., a lot of event risk, but 153 from a daily close, that's the key level to watch, okay? As far as we're concerned, at least. Euro, everybody again should be familiar because I've been pounding the drum on this. Probably everybody's bored to hell. That's why I posted the other chart. This is the chart we've been trading. So basically we've been long since the 128s. We've been looking for this to rotate higher. We've been looking to this get into 132s. We kept on saying there was unfinished business at 132s, and a hold above 132s opened the door for that 134. So we're still exactly right there, right? So look, this week's going to be even. The 133s are clearly being defended here, but the level to the downside are the 132s. So it's the same thing as cable, the 153s. So if you look at it in terms of a much simpler chart, right, this is the way I'm looking at it. And basically what it means is that we're stuck inside this chop zone, which is 133s and 132s. So don't be confused by velocity of the move inside this range, because it probably doesn't mean anything, right? If we start to get daily closes below the 132s, well, then we could see acceleration right back down into the 131 levels, etc. If we get a daily close above the 133s, then I'd expect the 134s to come quite quickly. Now, again, you can't control the market you've got to trade the market that's there. So it's just very choppy. We're going into the summer doldrums, and there's just lower liquidity. That means increased volatility on certain moves. That's just the way it is. That's why it's so much more important when this kind of market is happening, is playing out in front of us, is to understand that some of these bigger levels are what are really important, especially from a daily close perspective. And that's simply because, as we kept on saying on Twitter, the bigger players, the bigger volume has made his or her bet, right? And the interest is at the extremes, defending those bets, not getting chopped up in the middle when there's not a lot of people, not a lot of volume, not a lot of liquidity. Okay, so I hope everybody's having a great weekend. I hope everybody has a great end of whatever the weekend you've got left. If you like the content, don't be shy about sharing it. That would be great. And again, I'll see you tomorrow for London Open. Have a great one. Thanks for listening. Bye-bye, guys.